I bought it for 127,000 if I remember right, and I put it up for sale for like 400,000. And a whole bunch of people showed up that want to do trucking, like logistics, and so I told all the trucking guys I'm selling it to the city, and all the trucking guys got mad and they started outbidding. They just outbid and they got up to like 700 grand. Like, Luke, don't sell it to the city, we'll pay 700 grand for this thing. I just bought it for like the 127 like a couple weeks earlier, right? Like, I love these numbers. This is high traffic retail.
Hey everybody, welcome back to the REtipster Podcast. This is episode 223. Today I'm talking with my good friend Luke Smith. Luke is a land investor that many of you may know well. Luke has been making waves in this industry for years, sharing valuable insights through his YouTube channel and constantly pushing boundaries on what's possible in the land space. Luke and I connected on YouTube way back in 2019. If you want to see that original conversation, you can find it in the show notes at retipster.com/223. And since then, he has evolved his approach significantly, branching out from rural vacant land into fully entitled developments and even commercial real estate, specifically quick service restaurant deals. And today, Luke is going to update us on his journey. He's going to share his experiences with these new types of deals. Luke always delivers actionable advice. This is going to be great. Luke, welcome back. How's it going?
Thanks, Seth. Thanks for having me.
Yeah, absolutely.
No, that's great. I don't know how new it is. Real estate's one of the oldest trades in the world, right? I mean, it's been around forever. It's just applying data. I think this business is about applying data to real estate and knowledge and understanding. And our technology keeps evolving. We keep getting new tools. I watch lots of your videos and what you do, and you keep presenting awesome tools and things to understand real estate. I think one of the first videos that I really remember watching yours was the Agent Pro 24/7.
Yeah, I knew you were going to say that.
Yeah, right? I don't know where they are anymore. But at the time, they were a revolutionary tool of studying land and studying data that goes with land. You could click on a property and see who the owner of the property is. And Seth made some pretty awesome videos about that. And he shared a code to sign up with them. At the time, it was like $30 or $40. It was hardly anything data-wise. It was really cheap. I think they changed it to $99 or something later a month. But I signed up for that Seth deal, and I had it for years. And they grandfathered me in at his price for years and years. And I used that tool to study real estate. And since then, the technology has gotten a lot better. There's a lot more tools. Seth makes all kinds of videos about other tools that have been coming to market. You get tools that study the road frontage and the slope and who's there and how to get in touch with them in different ways over the phone or texting or mail and all the ways to contact these people and do a deal, right? Well, I started running into high traffic retail properties somewhere along the way. I was mailing for houses, house goes here kinds of properties. And I didn't understand it at the time, but I wanted better deals. I wanted deals that I could get bigger spreads out of, I could make more money off of, I could spend less time and make more money, right? That's, I think, everyone's dream, whether they know it or not. So I started going after fancier areas. When you get closer to more people, there's more people to buy your stuff and it's easier to sell it. And that migration from the super rural tends to happen over time, I think, with different land traders and dealers. And bigger dollar properties tend to have bigger dollar spreads, right? And so as you get close to more people and bigger dollar properties, I started mailing, I mailed all the properties in between and did all kinds of deals, like everything in between, right? But I started finding that in more economic neighborhoods, the commercial properties, like high traffic retail properties, those guys would get back to me and they would offer to sell the property to me. But where the house goes here property, house goes here type of property, they didn't want to sell to me for the same kinds of prices. And I really scratched my head about that. These properties are worth something. I don't know what they're worth, but I know they're worth more than I'm getting this deal at because I can see it in statistics, like other ones trade for a lot more. And how do I figure it out? How do I sell them for this price versus that price? And how do I get that spread? And it started coming clear to me that those kinds of high traffic retail properties are not priced on the comps in the area. They're not priced on what the houses are going for and who the highest and best use of that property is and how they could use that. And, it gets priced accordingly off of that. And so when you get into fancy dollar neighborhoods, those high traffic retail properties, like a property that a McDonald's would go on, maybe across the street from McDonald's or something, 1 acre-ish size thing, the easy flat access. You can see it from the street in all different ways, and just, the utilities are there, just a commodity kind of high traffic retail property. It trades for the same kinds of value that it does on the other side of the country with the same kind of traffic and the same kind of demographics.
Just to make sure I understand, Luke, when you say a high traffic retail property, are you talking about vacant land where you could put a McDonald's, or are you talking about like there's an actual McDonald's type building there and that's what you're dealing with?
Really good question. So coming from the land background, I was thinking vacant land. But over time, I started realizing it doesn't matter if there's a building there. It matters about how much traffic and how much business could be done there. Mm-hmm. You could blow that building up, or you could change the color, you could change the shape, you could bulldoze it and start over. It's a piece of land. You're valuing that piece of land based off the data and that we can get in today's market, like traffic. And I talk to a lot of different land dealers, and lots of people call me and ask for advice, and they ask for, what about this deal and that deal? How'd you do this one and that one? And they watch some old YouTube videos about some deal I did, and they need help with the one like it that they're working on. I help them, it just feels natural to me. I help a lot of people that way. In today's markets, we have really awesome traffic data. And some of it, when I started looking at traffic, it's like the government stuff of there's a dot here and there, and somebody did a traffic study to get a driveway permit or something, and they just wanted to make sure it's not too crazy to get rear-ended, or those kinds of studies, and that data gets published. But it's like 5 years old, and it's not right in front of the property, and it's down the street and around the corner, so it's not real. But now we have cell phones. I got my phone sitting right here. You probably have your phone in reach, and everyone watching probably is watching on their phone, or it's in their pocket or something. We travel around with our phones all the time, and those phones track us, whether we want it or not. Like, we've got Google Maps on there, or TikTok, or all kinds of other software, and they keep track of where we're at, and they sell that data. They sell that data to data brokers that use it for all kinds of things. Government entities use it to figure out where police should be when there's concerts and stuff, or events, or those kinds of uses. But there's real estate uses too. There's real estate uses about, if we have this piece of land, how much traffic is going by in front of the land. Most people don't care. But if you understand that traffic's valuable and you can sell stuff to those people driving by or walking by or that are there, the walkers are even more valuable. That data is beautiful. And then some of these data sets start taking it to higher levels, and they start looking at it as how many customers go to this restaurant, or go to this store, or this Walmart. This Walmart gets this many customers. And some of those data sets start merging, like demographics, the economics of those people, like how much money do they make? How much education do they have? Where do they usually shop? If they shop at this Target, do they shop at Walmart too? Some people are more inclined to go to only Target, and others are more inclined to go to only Walmart.
Where are you getting this traffic data from? I'm familiar with seeing like car traffic counts on roads and that kind of thing, but it sounds like you're talking about something different. How do you find this information?
Yeah, so there's a couple of different data providers, and they're subscription based, and there's free versions, like Placer.ai is a really popular one and trailblazer in the industry, and you can get some free information, like how many monthly visitors go to this shop, right? But if you pay, you can start getting the rankings. Like, okay, there's, 1,000 of these kinds of restaurants, and this one is ranked number one, and you can look at which one is ranked number one. And if you look at which one is ranked number one, you can say, why is this one ranked number one? Holy cow, they've got a crazy amount of traffic and really easy access, and they're next to all these other big names that are doing the same thing. So what's a number 10 and what's a number 100? And you can look at the market of everyone down the list. And I think that's a really awesome thing to do. I've got a little school community that's free, and I've posted a couple different lists of those kinds of data sets, like top 100 of a couple different restaurants, with links that you can click on to go see the location of them. And so you could do that for free. You can go on my little school community. So Luke Smith, Reverse Deal Finder. If you look up any of my videos and stuff, you'll find links back to it.
I'll include a link to that in the show notes, by the way.
That sounds great. I could put maybe some links directly to the kinds of lists I'm talking about too. You can look at them and you can say, these are hot retail sectors, and you can look at the traffic. You could look for free. You can do Street View, And you can say, wow, they've got turning lanes and they've got 3 lanes of traffic going by, and they're going by at 25 miles an hour or 35 miles an hour, not 55 miles an hour. Those people don't stop. But the slower traffic, and there's lots of it, and it's really easy to get in and out, or there's stoplights coming and going. This restaurant's in front of a McDonald's, or it's next to a McDonald's, in front of a Walmart, or in front of a Target, or in front of a Home Depot, or it's next to the hospital, or you can start to see what makes those awesome properties. And then you can do data sets like, okay, this thing in front of Walmart sells. These 1 acres in front of Walmart, they sell. How much do they sell for? These top restaurants are paying, and you can look up in the data sets how much they paid for their land. This is how much they're paying for their land. You can start reverse engineering those trades in today's marketplace. And so I love teaching that, the reverse engineering deals that are happening in the marketplace.
Yeah, that's awesome.
To go back and find more. And then you can look for more of those properties. Like, okay, in front of Walmart, across from Target, next to Home Depot, we've got the 3. So we've got the 3 that are there, and this lot in between them goes for X to this restaurant, or to this medical emergency kind of medical center, or this dentist shop, or whatever it is you're trying to reverse engineer. And you can see what they're paying. And if you see what they're paying in this marketplace of this kind of education, this kind of demographics, you can see what they should pay in that marketplace over there that you can get that land in, or you can mail for that land, or you can call for that land, or you can text for it, or there's so little competition. You can just look on the market and find the properties. And because of the data that we have out there, you can see what those properties are worth. And if you reverse engineer the ones that are happening in today's markets, you know the tenant that goes there and what they pay for it. And so you can go back to that other market and say, hey, Mr. Aspen Dental or whatever, I see you bought this property in front of Walmart, across from Target, next to Home Depot, 1 acre or 1/4 acre with 27,000 cars a day and 97,000 median income, or like this kind of education level. And you can paint the picture, and it's next to these same people. I've got the same neighbors, I've got the same traffic, the same demographics, or something's always different. Maybe adjust the price a little bit accordingly, and you pitch it to them, and you can put deals together.
When you say pitch it to them, like this Aspen Dental example, is this like how do you find who this person is? You just go to the corporate website and say, let me talk to the real estate guy, or like, how do you find these contacts and reach out to them?
It's a really good question. I get that question a lot. And I've tried calling the corporate website. And when you call the corporate website of a lot of those, especially the franchise ones, you usually get somebody that's trying to sell you a franchise. They say, Luke, do you want to buy a franchise? And it's like, I got this perfect piece of real estate for you, and I'll build it for you. I'll make it easy. I'll make it happen. And they say, well, I'll pass it on to the franchisees. And then you never hear back. But if you reverse engineer the deal, the ones that are happening, maybe in the neighboring market or in the area, you start to find the franchisees. You start to find the developer that's building for those. And when they're selling in the market, when they're marketed, there's a broker there that's answering the phone trying to sell that one. Lots of times you can talk to that broker and say, your client should do the next deal. And you could pitch it to them. You could help me, and we could do a deal and make another one and go sell another one. And so that's one way. The reverse engineering is you can go to the brokers that are selling the current ones, and they have a developer as their client that trusts them, and they're looking for new deals. The other way is those brokers are usually pitching those deals, and they're promoting them and as like triple net deals. They're based on the income of the property and the credit rating of who's behind it. And so they talk up and brag up who the credit rating behind the deal is. And it's usually a name, and it's something LLC. Lots of times you can just Google them and find them there. But we've also got all kinds of technology in today's marketplace. There's a bunch of different data sets that you can buy into that do it for you. And say, so like that Placer.ai I was just telling you about, or Alpha Maps. Alpha Maps is another one. Placer's got a void analysis tool, and you put your property in there and you say, I want it between, and you put the different parameters, and it comes up with who goes there. And it does the math of saying, with these neighbors, without those neighbors, with this demographics, with this, all this information that they have, these are the shops that should go here. And then they have like an add-on. You can get contact information of the real estate people to talk to at each one of those different names. And they rank them and they grade them. And then Alpha Maps does the same thing. Alpha Maps has a different data set of contact information for the same kind of approach. And so they look at who the neighbors are and how much traffic they're doing and how much business they're doing. And then they come up with contact information for those people. I think the add-on data sets with Placer are, as I've called every one of them and all those data sets and emailed them and talked to them in lots of different times and ways, right? I think it's the ones with Placer are way more expensive, but it's a lot higher quality data. And I think the Alpha Maps ones you go through the list and start calling them, and you get a lot of people in the companies that are not the right real estate person. You get a lot of other people in the companies. I think they scraped them off of like LinkedIn or something that connect with each one of those companies. So it's not as direct, and you boil that down over time. You don't need very many of those contacts to do these deals. You do one of these deals and you figure it out, and then it's a domino effect, and you can go, you know what your recipe is, and you go do more. And you go after the next one.
On the recipe, so I've heard you say a lot. I'm trying to looking at this through the lens of a land flipper. I mean, you know that world very well. You know the process. You get a list, you send direct mail. Some people call back, you keep going. It sounds like this is completely different. Like, is direct mail involved at all? Or is it simply going to Placer.ai or Alpha Maps, figuring out, basically handpicking specific properties based on traffic counts, and then figuring out how to reach out to them? And then I've seen on your YouTube channel, it looks like you make actual 3 or 5 minute long videos specifically for that person, like really showing them that you know them, like you've put time into understanding their situation, and then you're reaching out that way. Am I tracking so far, or am I wrong on that?
I started sending mail on these properties, and because that's what I'm used to doing. I've sent lots of mail, and I bought lots of properties and done lots of deal off of mail. I'm a big believer in mail. And it gets hectic over time, keeping track of it, balancing it, keeping up with it, paying for it. It gets a lot. And as you learn more, I don't think you have to. You start to get to the point where you don't have to. I spend a lot of time with partners and in multiple different ways going through data sets of high traffic retail properties and trying to copy deals that we already did, and looking for ones that have 20,000 cars a day or more, or something like that. Like 2 lanes going in either direction with turning lanes and flat, easy access looking properties with lots of roofs around them. And state by state, pulling data sets of those kinds of properties, commercial properties, and looking at them. Like, how do you filter those out with today's data tools? I still don't know if you can, but like the way that I did it a couple years ago was making links to look at them satellite view for everyone and going down the list, ding, 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 and saying no traffic there, no traffic there. That's commercial, but you can't get to it. Like, yeah, right. Nope, 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 nope. And just keeping maybe 3 to 5% of the properties that are commercial in that county or that state, basically going state by state doing that, and cover the whole country and start mailing them offers. And mail them offers based on the data that comes in. Because when you narrow that data pool down to those high traffic looking properties, then you can see what they historically sold for and what kinds of trades they did in all kinds of different areas of the country. And you start getting a revelation of what the market's doing by consolidating that data. And then you can just price off of that. And I did prices off of that and sent out offers. I bought lots of properties, and the people get back and like, holy cow, this looks great, and let's buy this thing and sell that thing. And you buy them for 100 or 200 grand and sell them for 500 or 700 grand or something like that. Right? Like, those are great spreads, but I probably could do more of that if I offered 200 or 300 and sold them for 5 or 6. You could probably crank it up. But as you get orders, you start to figure out what people want. You can customize it more, and you don't have to do them all. You can pick them. You can sniper them and do one after another.
Well, when you say as you get orders, what do you mean by that? You mean like buyers are telling you what they want, and then you can go out and find it for them?
Yeah, exactly. The buyers tell you what you want. They want to put gas station on it. Like one particular guy, he bought a couple properties from me, and I started studying it more and asking him more questions, like, how can I sell you more of these? And he says, well, I develop gas stations and I sell them. I develop them and I sell them. I'm like, okay, is it the spread? Or, there's lots of gas stations out there. And his competitive advantage was he's a oil distributor or gas distributor. And so he puts deed restrictions on the property to be the sole distributor for gasoline to that property. I'm like, oh, wow, that's brilliant. And it's vindictive too, right? Like the poor operator can't go somewhere else. You got a monopoly on that gas station forever, right? I thought it's a brilliant move. And so he just wants more properties he can build gas stations on and sell them off to people that want to operate the gas station. And it's easy to sell the gas stations. There's lots of them and you can just sell those things. And so what are the specifics? What you're looking for? And you start seeing what he bought from me. So he bought multiple properties. Like I can find more of those, and then you can target those specifically with mailers or with calls or with searches, with data sets, with all the different tools we have to find more for him and sell him those properties. Then it's different ones, like a coffee shop I've been talking to the last week. They bid on a vacant property, vacant building that I like. And it's like, okay, you like this style of building that used to be this brand because you know how to convert those really well. Then I can go out and into other markets of that brand building, like the vacant ones, and start picking up the vacant ones of that brand and convert them into this coffee shop. I can pull data sets of the old, the operating and the vacant of that brand and start hammering on them. And some of them are on the market, but the vast majority of them aren't, and we're data people, right? And so a lot of these other real estate people don't understand data that well. When you're coming from the land background, you do a lot of data. You do a lot of data analysis to find your deals and to do your deals, to reach out to your deals. And that background of doing that data analysis and to hone in on what properties you like, I think translates really well to these commercial properties. But you can get bigger spreads out of it, and you have your buyer in place. And when you have your buyer in place, you don't even have to finance them. Like you can structure them to just hand them over and keep a spread, right?
Got tons of questions to sort through this. So like,
go for it.
I wonder if maybe it would help to walk through, if you have a deal in mind that's like, this is a good representation of all the deals I do, like this example. Because I'm trying to figure out, like, where does your work start and stop? Like, are you just finding the property and saying, here you go, here's the property, go buy it now and pay me a fee? Or are you like buying it, converting it, finding a tenant, placing it, selling the property? Like, how involved are you with this? And do you pretty much always have a buyer in the end before you even find the deal? Like, is the deal pretty much sold before you've even found it? A lot of questions I just asked you there, so sorry about that.
You think they're sold before you get into it, but it's hard to confirm that with the buyer before you go do the deal with the seller. And so there's a dance in between that is part of the art that I learned really well in vacant land. And in vacant land, when you're getting deals that are not on the market, like you're mailing an offer, lots of times they agree to your price. And then you look at the property and you say there's something wrong. Like, I don't know about the access. I don't know about the, if you can perk test it or something. You have a question. And when I had those questions, I said, but I could probably still sell this thing to the right person that figures it out. And so I would ask the seller, yeah, I know I made you a cash offer, but I have this question about, it looks like a lot of rocks. I don't know if I can get a septic in here. Or I don't know about the access. The neighbors got couches across the driveway and they look like they have it all blocked off and stuff. And they say, oh yeah, those neighbors are awful to work with. And it's like, okay, so there's a problem here too. Can I have some time to try to sell this thing, find an end user for it? And if I find an end user for it, then I'll buy it from you fast and go close with them. And most of the time they say yes. Maybe not most of the time. Maybe I'm exaggerating. Maybe 1 out of 4 or 1 out of 5 people that I asked for that wanted the cash offer that I made to them would agree to that. So maybe that's not most of the time, but it's, I think, a high percentage of the time.
And when you say that, how much time do you have to find this buyer? Like, is it 90 days or 180 days? What does that look like?
Yeah. So in the vacant land trade, I would usually ask for like 90 days. And depending on the property, sometimes I'd ask for 6 months. Sometimes I'd ask for a month. If I'm not finding a buyer in a short amount of time, like wasting my time and I'm moving on, I'm gonna answer a whole bunch of questions about the couch cover in the driveway and why the neighbors don't get that out of the way and come out and yell at you and stuff, right? And it's just gonna be hard to sell that property. I'd rather move on to other ones. So I learned to do that. And then I learned to use other people's money to fund it for a day or two to close them. And along the way, some of those title companies started saying, Luke, why don't you use our money? Why do you bring these other people's money in? We'll do it for you. And it's like, okay, really nice, great. In some states, no, some states, yes. And you can do double closes. And then I started trying to do that with bigger dollar deals. And they said, no, not the bigger dollar deals. We don't have insurance that covers that. I'm like, well, maybe somebody else does. And I started finding title companies that cover bigger dollar ones. And I started asking for even bigger dollar ones. And we double close it in-house. I don't have to bring money from anywhere. And even these states like Michigan that don't like that as much, like you just put the money up, and it's not a Tennessee that's usually go for it. They just change their rules too. But some of the states, it's like, go for it. We don't need to fund it to do a double close. In other states, we should fund it to get around the disclosures. And so started figuring that out in vacant land. But if we can do it in vacant land, if we can use money, somebody else's money, whether it's a title company or the title company's partner or a partner that does transactional funding, to close when there's a question on the property between the buy and the sell, we can take out a spread. And that spread doesn't depend on a percentage. It depends on what we can market that property for, what we can agree to buy it for, and what we can agree to sell it for. And I love that. And I've done that hundreds of times, and all across the country in different ways. So getting into these commercial properties, why can't I do that same trade in the commercial properties? Just add a lot more zeros, right? And so I start asking, and some of them say, we don't have insurance for that. We can only do this. We can only do that. We can't do it in this state. We can't do it in that state. We can't do it with this, and we can't do it with that. But some of them started saying, yes, we can do that with a $500,000 trade. We can do that with $1 million trade. We can do that with a $3 million trade. We can do that with a $20 million trade. And we can do it in lots of states. And we can do it in lots of places. And bring your business here. They're trying to be more competitive.
When you say trade, what does that mean?
Like if I contract to buy a property and then I contract to sell it with somebody else, they'll fund the difference.
Okay, gotcha.
And they'll fund it for a day or two or a week or whatever it takes to close it. And I don't have to disclose what the numbers are to my end buyer.
So it's basically a double closing then?
Double close, yeah. The trade, double close. That's what I meant. Cool. If you take the property and you figure out the highest and best use for that property, like adding a tenant to the property, you can talk to the seller of the property and you can tell them, I know a tenant that should use this property. I've worked with them on other deals. Like, give me some time to figure it out, work out the deal with them, and then I'll buy it from you at this price. And that could be a market price. It doesn't have to be a discount price anymore. It can be the market price. If you're adding a tenant that's worth a lot more, the property starts getting valued off of the rent that the tenant's paying, the name of the tenant, the credit rating of the tenant, the viability of that tenant going from there. It could be a Starbucks, for example. And everybody knows Starbucks, and maybe Starbucks isn't the best example, but people, generally like to buy Starbucks, and they're getting some kickback in today's market. But, a year or two, 5 years ago, Starbucks is like the king of triple net leases. People love to buy Starbucks. They know they're going to stick around and pay the rent. It makes the value go singing higher. And so you can sell it to somebody who wants to collect the rent on that Starbucks. And that valuation is much higher.
Gotcha.
And so you can do a double close with somebody at market prices to buy it. Give me some time to work on it, get that tenant lined up. You can talk to the tenant. You can talk to the Starbucks, for example. You can work out a deal with Starbucks. Starbucks, you're going to build a building here and you're going to pay this much rent. And it's going to take this much time, and you want some tenant improvements. You want some money to make it happen. You want some time to pull it off. What do you want? What does it take to get you to make this happen? Say, okay, put it all together. We've got a stack of paperwork of the contracts. And you take it to the brokers that sell Starbucks and you say, okay, here's how much rent they're going to pay. Here's who the developer is. Here's, all the details of it. How much can you sell it for? I've got to buy it on the 30th of next month. And so I want to sell it on the 30th of next month or sooner. What's the price, the best price you can get for me by then? I'm not looking for the best price in the market over the next 6 months as you go market it. I want it that day. Who can buy it for me that day? you're probably already marketing Starbucks at better prices than what I'm going to get. And you probably have people shopping those Starbucks that are ready to go for the right Starbucks deal that comes across the pipe. Give them my deal. What's the price? Maybe you got 2 or 3 of those guys you can pit against each other. What's the price? Close it on that day, and you can go make it happen. So the difference between the vacant, it could be a vacant building that you add Starbucks to, or a vacant piece of property that you add Starbucks to, or whatever that brand might be, it increases the value. And then you can use double closing to keep the spread.
I'm making notes here as you're talking, trying to break down the process and understand exactly where you're adding value in this process. So I'm going to quick review my understanding. You let me know if I'm wrong. So it sounds like there's kind of like 4 big buckets where you're getting involved in adding value. It's first of all, just finding the property in the first place, which is probably based on traffic counts and understanding what potential buyers want. And then there is contacting the seller and negotiating the timeline and the price and all of that. And then once you close on that, or I guess in the meantime, you would find a tenant. And then once the tenant is found and in there, then you would sell the property. Am I following that all correctly?
Yeah, you're following it all correctly.
Okay.
You make it sound harder than it is, though, because a lot of people start with looking for a property and they don't know what they're looking for. And I like to start with reverse engineering a deal. So if you look at one that's happening in today's market, like a triple net deal, let's go back to Starbucks, for example. If you go to, I like to use Crexy.com as a fun website. It's free. They have paid versions too, but the free version works just fine. And you could type in Starbucks. You can type in the brand that you're interested in. And so you could put Starbucks in there, and you can see that there's a bunch of Starbucks for sale. And we're in Michigan right now. So let's talk about Michigan. I'm sure there's some Starbucks for sale in Michigan. If I pull it up, and you could look at what Starbucks is for sale in Michigan, you can see where it came from. You could look at the street view. Was this a conversion? Was it some other shop before and they turned it into a Starbucks? Was it a piece of vacant land and they turned it into a Starbucks? Was it a standalone property that you can see the price? They just bought it and then built a Starbucks. That's great. You can get a piece of data of how much they paid for that property. What's the attributes of that property? Who's the broker? What kind of timelines did it take to put this together? Who's the developer? You can usually figure out who those players are if you start researching enough. And then you've got a recipe of what to look for. You do that before you go look for the property. And then when you go look for properties, you know those ingredients for that recipe, like that negotiation you're talking about, how much rent, how much time. You can just take their information. You can take that broker that just did that deal and say, hey, can I have a copy of that lease? And I want you to sell this. Can we just make the same lease? Can we just do the same thing? Can we just replicate that deal? You don't have to go make it up again. Like, you can apply it to your new deal and you can negotiate accordingly. You can say, okay, the prices were this. Now I need to get my prices to be XYZ to get the spread that I want to get. And it's data. It's data analyzing real estate. That's the same ideas that come from vacant land. And so looking for vacant land. And I think the vacant land people are much more data oriented than the house people or the residential and in lots of other ways. And I think that's where it translates really well from vacant land people to these kinds of commercial deals. It's about that data, heavy data analysis.
So earlier when you said if you want to buy a Starbucks, what are you saying if you want to buy the building that Starbucks is in? Is that what you mean by that?
Yeah. So Starbucks doesn't franchise. They do licenses, I guess, or licensees. They have licensees that operate the building, which kind of maybe is sort of a franchise, but they don't call it franchises. It's not the same. So what you're trading is the real estate, the underlying real estate that Starbucks is renting. And so if Starbucks is renting that real estate, they usually have an agreement that's, if it's an older agreement, it's like 10 years or 15 years or something that they're going to pay rent. And no matter what, if they leave and they don't like the location, everything, they're supposed to pay that rent for that whole timeline. That makes it valuable. That makes it an investment. That makes it a high grade asset that you can borrow money from the bank really easily. They look at Starbucks and they say, yeah, Starbucks is going to pay. And the bank puts a mortgage on the property and they collect the rent and they give you the difference, right? It's a really easy finance to finance those properties. The last couple of years, Starbucks has been watering down their contracts. They make it so they can leave after 7 years without paying rent, or 5 years, or Some of the recent ones on the market, they can leave whenever they want without paying the. It's like, why do you sign a 10-year lease? It's not a 10-year lease anymore if you can leave whenever you want. So Starbucks has been getting harder and harder for the brokers to sell. You start seeing the cap rates, the price that Starbucks trade has been sliding. I say going up, the cap rate's going up, but the price that they sell for has been going down because they've been using their brand name to do these deals more so than the solidness, for lack of a better term, of their contracts, right? So some of the other coffee brands like Dutch Brothers still does really nice deals at 10, 15-year contracts. You could get a piece of land and you can do a deal with Dutch Brothers and say, Dutch Brothers, I've got this beautiful land, and they do a lot of the ground leases, and I'd like you to come build a Dutch Brothers here and pay rent for the rest of forever. And Dutch Brothers buys those properties up. They might ask you to do the groundwork, put the utilities in, put the driveway in, put the dirt work in, and then they'll build a building. Or they might ask you to do the dirt work and give them $500,000 or $800,000 or something, and they'll build the building. It's like you're giving them the money to build it, but they build it faster and cheaper than I could. And then they rent it back over time. There's a lot of different ways that they do their deals. And so you can study how they're doing them in the marketplace and go ask for that same deal. Like, I've got this property, it fits the bill, it's got the traffic, it's got the neighbors, it's got everything you want. You're not here yet. You should be able to do really good business here. Look at how much Starbucks is selling across the street and these other ones, and you should be able to do this kind of business based on how much those neighbors are doing. Do a deal with them and go sell that property.
Are you ever taking title to these properties longer than just a double closing, or is it always that double closing scenario?
I've just been doing the double closing scenario on the newer ones.
Have you ever thought about doing all this stuff you're doing, but just keeping it? So like you're basically just building this as a long-term investment for yourself?
Yeah, that's the long-term plan, right? I've had a couple different guys approach me about that too. And they say the same thing. Luke, why don't you use my money to buy these in, lease them up and collect rent for a year plus, get the long-term capital gains going, and then vend them off into the triple net markets as, use the money to go buy the next one and do it again and do it again and do it again. I love that model. I love that business. I'd like to do that. I just feel like the learning curve is still there. And I also feel like these QSRs are the desert squares of commercial property. They're really fun. There's good numbers on them. And you can make a whole business out of trading desert squares and vacant land. You totally can. But I think as you learn more, you start wanting more. Like, you want the property with a view, the property with a real driveway and a real neighbor and a real buyer that's going to build something and use the property economic wise, and not a bunker or a RV camping site and stuff. I've sold hundreds of those properties. They make money. They're great. It's just, I get tired of the conversations of buying them and selling them and the dollar spreads for all the work that it takes. I think these QSRs are the desert squares of commercial. Like, I'm already looking at Publix and Aldi and bigger ones, right? The same business, but bigger assets and bigger spreads. I grouped some money together with some partners and bought a property in Ohio that I thought we could put a Home Depot on. And it was right next to Lowe's, and Lowe's was doing 98 percentile Lowe's, like really good Lowe's, right? And what's the best place for Home Depot is like next to one of the top Lowe's in the country, is my opinion, but maybe I'm not always right. And there's a big no Costco around there. There's 3 Costcos in different directions, but not right here. And it's a huge retail market, and it's going off, and all the numbers and drive and all the statistics I could come up with is a perfect place for a Costco or Home Depot. I had just bought and sold some other properties in that retail market and made pretty good money off of those. And I thought this one was going to be really good. I bought it from the same people I got the other one from, another one just down the street, and went for it. And I couldn't get Costco or Home Depot. It's out of my league. I couldn't do the sales pitch, get the deal, make it happen. But the people that build apartments loved it. It's right in between the hospital and the Lowe's, and there's people all over the place. It's a great place for apartments. And so we went down that pipe for a while, and the market's changed, and we lost those guys, and then went for some guys showed up that wanted to do townhomes. And it took a while, but we did all the work to get the entitlements to do townhomes on the property. And it took this 24-acre property and turned it into 159 townhomes. And just, just cashed everybody out that helped finance that one and did that deal. It took a long time, but I think it paid out pretty well, and I learned a lot off of that deal.
So that was purely an entitlement deal, like just getting their permission to build that, but then you sold it to the people and they built everything?
Yeah, so it was entitlement, and I bought a 6 or 7 acre property down the street from this one, and the sandwich shops are going off, and a lot of the shops were just doing really well, and this thing was on the corner and it looked great. I'm like, this is going to be a bunch of shops go here, and the numbers look too good to be true. I bought it for $127,000 if I remember right, and I put it up for sale for like $400,000, and I had a guy right away try to pay $400,000. It's like, okay, great. He was going to close in like 10 days. And day 9, he says, no, I found this other property that I'm going to buy at auction and I'm canceling. It's like, fine, whatever. I'll go back on the market. And went back on the market, and a whole bunch of people showed up that want to do trucking, like logistics, and because there's a big turning lane. And so I was calling the city, can they do truck wash? Can they take the trucks apart and have pieces laying around and put them back together? Can they have trucks coming in this entrance and out that entrance? And can they have parking? And can they, everything trucks? All the truck guys wanted to know if they could use it. So I was calling the city like 5 times a day or something about what they could use the property for. And the guy at the city, I got to know him, and he said, Luke, how did you get this property? And it's off a mailer. I sent some mail out, I found your YouTube channel. I'm looking you up, and this is really cool. The city wants to build a Department of Works, and I've been, entrusted to go find the perfect spot for a Department of Works for the city. I'm like, that's great, but I don't want to sell it to you because you're going to take forever. I got these other guys that are trying to pay today. Like, if they could do what they want to do on the property, I'm going to sell it for a bunch. He's like, how much are you selling it to them for? I'm like, gulp. I had it on the market for 400, and these guys are like trying to outbid each other. I'm like, 525. And the guy says, hold on, we'll don't sell it yet. We could probably do that. And a couple of phone calls later, the guy at the city is saying, we want to buy it. The city wants to buy the property from you and do a Department of Works. I'm like, that's great, but how much time is this going to take? Like, have you ever sold something to the city before? Like, give me a break. And because other examples I have in the past, it's like 180 days to start before they start doing votes, and it's like all kinds of stuff. And he said, well, I think we can do it in 30 days, but we have to do a city council vote. I'm like, yeah, here it goes. And do a city council vote, and but the city council meets next week on like Thursday. Like, how do I know the city council is going to vote for this? And the guy literally starts 3-way dialing the city council people. There's like 9 people on the city council, and he's calling everybody. Like, okay, they all agree. We're going to try him. And so I told all the trucking guys I'm selling it to the city, and all the trucking guys got mad, and they start outbidding. They just outbid, and they got up to like $700,000. Like, Luke, don't sell it to the city. We'll pay $700,000 for this thing. I just bought it for like the 127. Like a couple weeks earlier, right? And like, I love these numbers. This is high traffic retail. They can put their business here. They really want this thing. I want to do more of these properties. But I got in with the city, and if I cut the city off, the city's not going to let all these guys do what they want to do on the property, and how am I going to sell it to them? So I got to close with the city, and I closed with the city, and I did. And I made a good relationship with the city. And then I can call them and ask about, how do I make apartments go on this property? Or how do I make townhomes go on this property? What do we have to do? And they became good friends, right? And you can ask questions and you can get through to them. And it's like, oh, this is the guy we bought the Department of Works property from. Now they're trying to sell me some other properties in the city that they don't know what to do with. Like, Luke, you can figure these out. And I'm scratching my head, and they're like, they're not my thing. But you make good contacts like that, and you don't know where it goes. It started with high traffic data, and it went to the one on the corner, and then it went to the one up around the corner that turned into a neighborhood. And so because I had the relationship with the city, I was comfortable to work through that process. And we got all the permissions to build a neighborhood on this thing, build townhomes. And we got a partner that showed up that paid for the entitlements, and so they wanted to run it through the process, and so they took on the financial surveying and detailed engineering to draw it all up and make it happen. And while they did this, they got a half dozen different home builders involved, and they asked their advice, and they said, how do you want the lots? Do you want them, how do you want the homes? Do you want them this size, that size, something that fits their criteria? And we'll get that specific into the entitlements of what we can build here. And so they got it customized to the builder. And I thought that was beautiful and brilliant, and the way they did that. And they got the builder involved earlier on through the process. And the builder in this case was Ryan Holmes. Ryan Holmes does homes all over the Midwest. And I think they even go out to like Phoenix too. They customized it to Ryan Holmes and got everything that they wanted. And then Ryan Holmes doesn't buy it until it's shovel ready. So we took it all the way through the permitting process, the detailed engineering, permitting, and when the permitting was in hand, they were ready to close like that day, and then they pay. They closed ahead of time, and so it's great. And so I asked those guys, okay, what's the next one? What are you looking for? What are the attributes? What do you want more or less of versus this deal we just did? And they gave me very specifics of what they're looking for. And so we can take those specifics and go find more properties and feed it to them. And it could be bigger neighborhoods. It could be bigger dollar spreads. It could be, I know what to negotiate in the front to get to the end game and what the process is to take it from here to there in the same city or other cities in the region that they're willing to do this in. And that's the order. That's what commercial real estate's all about. You get that order of what they're looking for, and they trust you and they know you, and I trust them and I know them to some degree, and we could do it again. We could do it again on many more of these properties, and we could follow that recipe that we figured out on this one and just replicate it. And that's the beautiful thing. The data approach of finding those properties is the land guys, and that land background brings me to the table to be involved in this. And a lot of these other people don't have that data approach of finding these properties.
Yeah, it sounds like the money can be made here by utilizing relationships, but also data and understanding what creates value. And when I think about a property like this, it sounds like the value is a mixture of the traffic, but also the lease. Like how much, like who is the person leasing or the company leasing the property, and then what does it pay? How long does it go? Maybe there's a little bit of building value in there too. I'm not sure how much that even matters. But when it comes to things like the traffic, the lease, the financial performance of the tenant that's there, how do you get all that information? Like, I understand the traffic counts, but like, how do you get the financials of the Starbucks that's there and figure out what they're making?
You start from the end. And so these brokers are trying to sell these things, right? And they answer the phone and they tell you about it and they present it. If you start cruising around on Crexy, you can do the same thing on LoopNet too. But I keep talking about Crexy because I think they're more advanced data-wise, statistics-wise, in what they offer than LoopNet. They ask you, if it's your first time on Crexy, they ask you for your name and your phone number. And I advise people all the time that I've talked to, put your real name and your real phone number in there. These people are going to call you. And maybe you don't like that. Maybe you're not comfortable with that. And maybe it isn't right for you. But they call you. And so when you look at these listings and you start shopping them, sometimes your phone will start ringing like while you're looking at it. That broker's crazy. I don't know how they do it that fast, but they do. They call you and they say, Luke, what do you, and they know your name because you typed it in, years ago or whenever you signed up for Crexy. And they say, Luke, what are you looking for? I see you're looking at my XYZ. And you can ask them questions. I see you're selling this Starbucks. And what's the rent on it? It goes up 2% every year. It goes up 5% every 5 years, or it goes up 10% every 10 years. It goes for these many years. It goes for this much time. Who's the tenant? Like the Starbucks corporate, it's Starbucks is going to be Starbucks corporate. But if it's like a Burger King, okay, is it one of the bigger Burger King franchisees, or is it like they got 2 or 3 locations, or who are they? What are their financials? Can you share the financials with me? They say, yeah, you got to sign like an NDA first, but we'll send the financials over. And can I see the lease? Yeah, we'll send the lease over. You might have to like sign something that you're not going to share it or something, but they'll send the lease over. They'll send over information about these properties that should be your data set. You should be saving this. You should be databasing it. If you're studying Burger Kings, you could do that in a whole bunch of different listings. You can get leases on a whole bunch of different listings. you can look at your data from being a land trader of how much they paid for it. You can look at Street View and things and see when it was dirt and it turned into a building, or when it was a Wendy's and then it turned into a Burger King or whatever. And you can look at the prices. What did they pay for a vacant Wendy's, and they convert it into a Burger King, or, some story history like that. And you can piece it together, and you can get a lot of that information out of the data that's there to use on your new deals.
Yeah.
And so I think because you start with the end of the ones that are listed in the market, you can get information on those for the newer ones that you can work on. The brokers answer the phone, or they call you. They actually pick up the phone and call you. And lots of real estate, it's like, I'm trying to call somebody, I can't ever get a hold of them, right? In this game, they call you faster than you can turn around sometimes.
It's really interesting because my experience with commercial brokers is that a lot of them are kind of jerks, or they're just like it's kind of surprising, like how, I don't know, they don't give me the time of day. You got to like do something to prove that you're serious. But it sounds like Crexy is the answer. Like you just put your information in there and things will come to you. Is that right?
I think it's a big piece of the pie. Some of those brokers are jerks. Some of them won't call you back. A lot of them leave a listing on the market for a really long time, and it's been sold, it's been leased, they're just window dressing it, trying to get more business. It's a sales pitch for them. And so you call them and they're like, oh yeah, that one's gone, but we have another one, or let me add you to the database for the next one. Yeah, that's really annoying, right? MLS makes up rules about doing that, and the commercial space, it doesn't have those rules. So they do it. They get away with it. And I don't know if anyone calls them out on it or you flag them or what. I don't know. But they do it. They want to set up meetings and interviews and stuff and say, what are you looking for? We'll go find it for you and bring it to you. I mean, you could put them to work for you. You could tell them exactly what you're looking for. Like this neighborhood deal we just did. I want, go through the specifics and see if they bring more of those lands to you. There's some of those brokers have brought me some pretty fun deals that I've worked on, but lots of times I find them more myself doing data sets and looking at them different ways, statistical kinds of approaches. But you can ask them questions is the main point. And you can ask them questions about the deals that they're trying to sell, especially. And they'll tell you a lot about them. And they'll tell you about the competition. They'll tell you about the other brokers. They'll tell you about the other brands, the competitors to that brand. They'll tell you, like one of the brokers I was just talking to a day or two ago, is a specific brand that wants to lease one of the buildings that I'm trying to lease out, has properties for sale in Florida and properties for sale in Alabama. And it was different brokers trying to sell the Florida ones and trying to sell the Alabama ones. And so the Alabama ones, the pricing was like 1.5 cap off. Like Alabama ones were cheaper, right, than the Florida ones for the same brand shop. And so I was asking, why is it such a difference? And it's like, because of Florida and Alabama. Like people pay more for Florida assets than they do for Alabama assets. Like even if they're paying the same rent and they've got the same kind of credit rating. And yes, I was like, okay, that was, I should know that, but it didn't come clear to me so well until the broker really explained that. Like, why are these Alabama ones sitting and the Florida ones are under contract? And the Florida ones are like, 6.2 cap, and the Alabama ones are like 7 or 7.5 cap, and they're still not selling, and people are just much more willing to buy the Florida version of that same brand. It's like, well, I'm glad mine aren't in Alabama, and I know I got to price deals differently for that same brand for Alabama deals versus Florida deals. And that's the part of it too. You go to these brokers and say, okay, I got the building, I've got the tenant, I've got, here's my ingredients. How do I put this together to make it the most marketable thing? And it looks like you're the guy selling this. Like you're talking to the buyers. What does it take? The backer. Okay, we need somebody backing it. Daddy Warbucks. Who's Daddy Warbucks that's going to sign off behind this 2 or 3 tenant kind of franchise? And do they have that backer, that financial guarantor to the deal or not? And if they do, then it works and we can sell it real fast for market prices. If they don't, then it's going to be really hard to sell. We're not going to be selling it for market prices. We're going to be selling it for a lot, mom and pop kinds of prices. It's, you could talk to the brokers, you could talk to them, and they do it for you. Get this. I have some leases, and they'll pull leases out of their databases. Look at this one, and this one. These ones sell for this brand. This brand usually wants this particular and that particular clause in their lease. Watch out for that. This is what they're going to ask for. And then you go into the negotiations knowing like what they usually ask for and what other deals they've done. Right?
Yeah.
That's there because those deals are being sold in the market. That same point we're talking about.
So I know you mentioned the double closing timeline. You've got about 90 days when you're dealing with land deals. Is it 90 days for this type of property as well? Or do you need to give yourself more time to put all the pieces together?
More than 90 would be ideal. But I mean, it's a lot of them like to get back to 90. They could go ask for 4 months or 5 months or 6 months or something. And they depends on the deal, but they'll get frustrated with you and try to negotiate back to 90 or 120 or some timeline like that. And it depends who the broker is too. Lots of times the brokers will be like, no, I want my commission, like, my listing agreement's going to run out. And if I go try to remarket it after that, and then I got to get a new listing agreement with the people, they don't say that, but I think that's going on in their head too.
Do you have to put down like an earnest money deposit for this kind of thing? And if so, how much?
Yeah. I mean, I've tried all different kinds of prices on earnest money, and sometimes you can do it without earnest money. But I mean, I've done 50,000 and 40 and 30 and 20 and 10 and $5 and $2,000, and they all work. It depends on who you're negotiating with. And so I do a lot less of the bigger dollar ones and a lot more of the smaller dollar ones. And, $5 or 10 grand, it works for most all these deals. Sometimes they kick back and want 15 or 20.
What are the conditions on which you can get that money back?
Yeah, I've only really lost one deposit, and that was more of a land deal I thought I could turn into a storage facility. Probably should have been asking you for advice on that one.
Yeah, sure.
Put down a $50,000 deposit, and I thought I had the deal all lined up. It was just, there was red flags all the way through, and I should have followed those red flags right out of the gate. The guy was on the other side was very hard to negotiate with on a lot of fronts and hard to work with. And I had a partner that put the 50,000 up, and I was really losing sleep that we were going to lose that deposit. Turns out another storage facility went through zoning and planning and zoning like 2 doors down, and we found out about that. It was going to hit the market. They were going to build this thing, and killed the economics of my deal. And so I tried to cancel within the timelines and everything of the deposit contingencies, and the guy said, no, you wouldn't give up the money. He'd rather it just went to court than ever getting anything. And I think the biggest part of it was communication, lack of communication on my part and this guy's part. I mean, he'd stopped talking to me partway through the deal, and it just didn't go right. And even though I had everything in the contract right, I just lost the money. And so I ended up negotiating, changing it into an option contract with a guy for 10,000 instead of 50,000 to get it to go for like another 6 months time to try to figure it out. And I got, I bought out the partner that put up the deposit, so the partner didn't lose the 10 grand. And so it turned into 10 grand to me that I lost on that one. That was a learning curve. And because of that, I've spent a lot more time and energy studying the contracts and especially communication in deals. I think the communication in the deals is even bigger than the contracts, but my contracts always want it refundable within that due diligence timeline. And it even says, if I go missing, or if I'm in the hospital, or if I disappear, if I forget, if I fall asleep at the wheel or whatever, I've got to do paperwork to make it go to closing, to extend it I make it automatically cancel out and deposit goes back to me if I don't do anything. And because I don't want to miss a timeline or miss something. I get some kickback on that, but lots of times the sellers want me to do paperwork to cancel instead of doing paperwork to go forward. And so I'd structure it that way, and I haven't lost any others. So, if you cancel them, you get them back.
Most of the properties that you are getting under contract like this, are they not even listed? Like, you just know what people want to buy, and then you figure out how to contact them directly?
Yeah, I usually start with the ones that are listed because it's so much easier and faster. If I know what somebody wants to buy, I'll go get those ones, and then I'll, because you can talk to the brokers and do deals really fast. But from there, you take it down the path of the ones that are off the market, that are not listed, that maybe people put on the MLS instead of the commercial stuff, or that are more eccentrically, there's a sign on it when you do Street View and you can't find it anywhere else kinds of listings, and go down those rabbit holes as well.
In terms of figuring out offer prices, whether you are buying or when you're selling and the lease is in place, how do you even formulate that? Say if you're getting a property under contract that has no tenant in it, all we have is just really good traffic counts. That's the only thing going for it. How do you convert traffic to value? Like, is it for 20,000 people that drive by a day at 25 miles an hour? That is worth X amount. The building doesn't even matter. We don't care about that. We just care about the traffic. Like, what is the formula you go through to say, okay, this is objectively what it's worth now. And then once I have the tenant in place, now it's objectively worth this. And that's how I make money.
There's a price. I spend a lot of time on the auctions. Like Crexy does a bunch of auctions. 10X does a bunch of auctions of these kinds of properties. There's another one called Real Insights. I've never traded through there, but I've traded through the other auctions. And they're 30-day close, cash price auctions. And when you're looking at commercial prices, there's cash price and then there's contract price, if you will. And so I'm usually working on contract price ones in all our examples so far. But if you go look at the cash price of these trades, like the ones that sell at auction, you'll really open your eyes to what these things can trade for. I was talking to a broker 2 days ago, I think it was Tuesday, and good looking shop. And he said they just bought it, and while I was talking to him on the phone, I pulled it up in one of the data sets to see how much they paid for it. They paid $327,000 or some crazy price for this vacant QSR, this drive-through fast food shop. And they were asking $850,000 for it. And I was asking them how they came up with the price. And, while I was looking up what they had paid for it at the same time. And they said, well, we're looking at the comps. The one next door sold for this, and the one 2 doors down sold for that back a couple years ago. Like, okay, but so how'd you get it at the 300-something thousand? That sounds like an auction price. And you're like, how did you know? It's like, that's an auction price. 300,000 on these QSRs is the kinds of prices these things happen at auction. That's a cash price. Somebody's going to just buy it and go figure it out. Whereas the 850,000 that happened next door and 2 doors down kind of price, someone like me gets a contract on the property and figures it out, and then they pay for it. I could pay when we do that a lot higher price than the cash buyers, because we've got it in game. We know the math between here and there. So you're asking how to figure out that math. I think there's a bifurcation in the market between those cash prices. And I think you should start by looking at a lot of the cash prices that go and happen in the auctions. You can sign up for those auctions without paying or without ever bidding on them, and watch them and wait for the day that they close. You got to watch them down to the last second that they close, and it'll say whether it's reserve met or not. It doesn't count until the reserve's met. But if you start looking at what a lot of those similar kinds of assets go for, like a vacant Burger King building that's 2,800 square feet or 3,300 square feet or something, there's lots of those in the marketplace. What do they sell for in the cash auctions, and what kind of market are they in? Like, okay, 300 grand, 400 grand, maybe 500. And what do they sell for if you go try to ask for some time and do a deal on them? It might be that 700-800 grand. Or if it's in a really high, awesome retail space, South Florida or something, it might be 1.5 or $2 million. But so there's some geographicness to it, and how much traffic is there and how much demographics are going for it. And it's not always the higher the income in the area, the more business happens there with these restaurants. Like if you take White Castle, for example, there's a lot of White Castles that hit the market over time. And if you look at the last year or something of vacant White Castles that hit the market, you'll see incomes that are like $120,000 or $105,000 or $95,000 or something. Higher incomes for America. This are higher, more education, more income areas. And the White Castle doesn't work. But if you look at places where it's $40,000 and $50,000, $60,000 kind of average or median incomes, the White Castle does a lot more business. And if you look at the statistical spread of White Castles, like the top White Castles, there's an inverse relation with income. As income goes up, they generally don't do as well. So the pricing You're asking about just the traffic. There's a brand component, but that traffic is always worth something. You could take that White Castle in the higher income where the White Castle doesn't work, and you could turn it into a chicken salad chick or a McAllister's Deli or a Raising Cane's. If you could ever fit, Raising Cane's might be too big for a White Castle building, but you could bulldoze White Castle, put a Raising Cane's there. They eat up the higher income and they pay a lot more rent. And like changing that brand from one that doesn't work in that demographics to one that does can unlock the economic potential of that property in a really nice way. Those names, you don't have to know those names or that math because the AI software that we already talked about does it for you. They point out those names and who belongs there, who works in those demographics and that traffic. And you can look at them and say, those people answer the phone. I can do deals with them. Right? So I'm more willing to go for that property than this one over here that doesn't, it's already got the people that should go there. And there's like nobody left to pitch and they're asking too much money. And I don't know if I'm answering the question, but I'm giving you the tools to answer it.
It sounds like there's a lot to learn about this, and it sounds quite different from what most land flippers are probably used to, although there's a similar skill set just in terms of finding and analyzing data. If people want to really unpack this and understand, like, how exactly does this work? I mean, are you like teaching that or something, or like how would they figure that out?
Yeah, good question. So I've set up a free school community because I get a lot of questions, and so that's I think we could put a link.
Yeah, I'll link to that in the show notes again. REtipster.com/223. You can find a link to it there.
Sounds good. And so I answer a lot of questions. I make videos. I make lots of different YouTube videos and videos about different attributes of these deals. And I teach and I show people, and some of the guys want more. And so I hold hands with some of the guys or gals that want more. And I do a more advanced version of it from there if you want to dive into it more. But I mean, the basics, I teach a lot of the basics for free and carry some people into it a lot deeper. We go do live calls and talk to the brokers, negotiate deals. I do live calls and talk to tenants and negotiate deals. And I put them together and I show people how to do it. And their response is always like, Luke, I didn't know it was that easy. How could it be that easy? Why didn't anyone ever show me this before? I get a lot of those kinds of responses. It's like, yeah, I beat my head against the wall a lot and I made a lot of mistakes to learn, Mm-hmm. I'm just trying to help and show what I've learned, and we can go do a lot more deals out in the future. So these people I work with, they start bringing tenants and deals that I would have never gotten into without working with these people. And then we can ripple off from there and we could do even bigger deals. Like if I could get the whole corner and I could put the Publix in the back, and now I can put this shop, this shop, this shop, this shop, and this shop in front. These are all people that I've worked with that work with those brands. We could put them all together. Everybody makes more money by creating that good old boys club of who those contacts are, right? And then somebody else can bring the piece that's going to be an Aldi. We could put an Aldi on it, and then we could put a gas station in the front, but bring the gas station guys, call the dentist guys, call the urgent care guys, call the fast food guys, and we put all those in front of the Aldi. It's a ripple effect, and that's where I want to take it. That's the plan, the hope, the wish. That's why I teach, and that's why I get out there and train and help people. And it's starting to happen, and I think it'll happen more into the future.
Whenever I talk to guys and girls like you who sort of started in land but kind of transitioned into something else that, like they could use land as a springboard to it, knowing what you know now about this, I don't know how much money you're making compared to how much you were making in the land business, but like if you could go back in time to 2018 or whenever you got started in land, knowing what you know now, like would you have just started right with this and skipped over land altogether?
Totally. I don't know how I would have skipped over land altogether, but knowing what I know now for sure, I would have. I love the land business. I'm passionate about the land business. I'm proud of my land business. I had a lot of fun with the land business, but it's, I don't know if graduation's the right word.
Yeah, maybe.
Maybe you move to the next level, right? And I think there's more levels to move to in what I'm doing as well. And I've always said that in the past. I want to do bigger deals, bigger spreads, more. I want to chew off more. And I usually have a hard time doing that because I've bit off so much of the current stuff that I'm already into. Like, having hundreds or thousands of properties in inventory at any given time in the land space. Like, okay, how do I get through this beaver dam of process, processing all the paperwork on these things, like signing closing paperwork, like waiting to log into this call, like how fast, close, got another one sold. Here we go. Title paperwork. It's at the notary half the day yesterday. Why do I still have to go to notary in person, physical paperwork? Come on, just why am I dealing in some of these parts of the country that you have to do that? The vast majority of it can do everything online. You can assign it to other people.
I think it's important for land investors to think about this and possibly do, maybe what you're doing, maybe something else, but just this idea of there is a graduation phase. There comes a time and place when I should start moving on to something else. Not that I have to quit land, but understanding land doesn't have to be the final destination. For a lot of people, it probably shouldn't be. There are much bigger and better things out there. Land is a really important springboard to getting there. You learn a lot, and it's also a really good cash generating machine. But that doesn't mean you have to just keep doing that forever and ever and ever. There's a lot of other cool stuff you can do once you have the skill set that land provides. It's cool to see you doing that.
Yeah, you too, with the storage property project, your storage project, building, learning land deal after land deal, eventually get land that you're keeping, that you're building into a income generating business, and it should pay for, I don't know how long you keep it, or maybe you already sold it and I missed that part, but it could go for your kids. The kids could keep collecting rent. You don't have to be there doing the deal every day. There's lots of assets like that. And eventually these kinds of triple net assets, where the tenant pays the taxes and the insurance and the bills and everything. I love that side of the business. I want to be there. You asked if I want to keep them, or if I ever keep them. I want to. That's the plan. I don't have the cost of capital to sit on these things and keep them, but I hope to and wish to someday. But as you make them, they sell so well on the market. It's okay, goodbye. Go make some better ones. I'd rather have the grocery store and the shopping center than the drive-through shop. I'd rather have the whole retail space. I think I could end up with those. And I think these QSRs are the key to that kingdom. They're the playing cards to get into that game. That's just a good piece to know. Just the out parcels, the parcels in front of Walmart. If you know how to sell the parcel in front of Walmart and how much those go for, maybe you could do a Walmart deal someday. You sell those parcels to get the land to put Walmart on there. There's so many ways to do these. Other people in land, I see them graduating to subdividing, minor land divisions. And I love doing minor land subdivisions where you don't have to ask much of any permission or none at all, and just dividing them 4 ways or 10 ways or whatever the local regulations let you do. That's a huge transformation for a lot of people in the land business. Instead of buying one and selling one, buying one and selling 4. And they grow and they grow, and then later on they want to do the entitlements in the whole neighborhood. And that's a beautiful thing too. There's a lot of opportunity for that. Maybe some of those people will love the data of retail as well, like I do. Maybe the data on retail is the heaviest data of all the real estate that I know. But it's also a competitive advantage if you like the data side of it. And retail is a huge space in real estate as well. There's a lot of ways you can go. You can graduate and move up into different channels or different avenues of land. It's beautiful.
I've got so many more questions, Luke, but I know we're kind of getting up on our time here. I'm going to actually head over to your school community and just start posting some of those questions, because there's a lot more I want to understand about this, because I think whether I ever do precisely what you're doing or use certain elements of it to find other deals in other ways, there's a lot here, I think. So I appreciate you coming on and explaining what you've been doing.
Even the right commercial property, it's Luke, what do I do with this thing? Is this high traffic retail you're talking about? What should I sell this for? I might be I know who uses that one. I might be able to help. So feel free with that too.
Awesome, man. Well, thanks again, Luke, for coming on the show. Again, I'll have a link to...
Thank you. Thanks for having me.
Yeah, I'll have a link to your YouTube channel and your school community. Maybe I'll find some other stuff you have out there. But again, REtipster.com/223. Fascinating stuff. Appreciate you sharing.
Thank you.
We'll talk to y'all next time.